Morning everybody, Dwayne Chopper there, DRFX Forex Swing Trading. Today I'm going to take a look at the situation now taking place on the Aussie US dollar, which depending on where you would have entered during this move, could have offered anywhere between 100 to 300 pips for those persons who would have entered short on this trade. So let's take a quick look at what explains the rationale behind this current bearish move. As you can see here, the market formed a range setup which has been in place since the early part of this year. As you can see from the resistance boundary here, the market attempted to break out bullish on two occasions. Those two occasions were essentially attempts at starting an uptrend that would have continued to break above this inner downtrend line and possibly head at least towards this outer downtrend line, both of which have defined the current direction, the current bearish direction of this pair for a few years. So that was the intention for the bulls a few weeks ago, with the appearance of those bull candles above the resistance of this range. However, as you can see, the bears eventually took control and led to the formation of the double top signal that you see here and the subsequent break of the uptrend line as well as the resistance boundary. So this is a typical setup that we see with breakouts. If the breakout does not take place in one direction, the market can produce a signal that indicates that we're going to head back inside of the consolidation and essentially form and create what is known as a false breakout reversal. So this is a very typical example of a double top formation, which you'd have seen across the market on several occasions, both with respect to false breakouts from consolidations as well as with other setups that take place across the market. So it was no surprise that this reversal would actually take place and head toward the support boundary as it is now. Perhaps within the next couple of hours or by tomorrow, the market would have hit the support boundary at 76. And based on the theory of consolidation and false consolidation breakouts, we could see a few options taking place, a few scenarios that could present themselves over the next couple of days. Once the boundary of support is hit, the market could continue to move within the resistance area, rallying at support as it continues to move within the boundary. However, what normally takes place with sharp and strong false breakouts such as these is that the market may take a break at the support area here, but eventually break out in the opposite direction, breaking this boundary here to continue this movement. So this is the more likely scenario. The market, it is possible for the market to rally here and to continue to move within the boundary, but the more likely scenario is for the market to break out below this support area and continue the movement in favor of the existing downtrend, the predominant downtrend for this market. So that is what we are expecting when after the market hits this support. The market could, in breaking this support boundary here, the market could take a break and move sideways, or it could continue with strong bearish candles until it reaches another target, another major target in this area here. So that is what we are looking at for the time being, and that's what we expect to see over the next couple of days, and hopefully that can provide us with a significant trading opportunity as it is now provided for those who have been in this trade. So until then, take care.